Rates live with the mortgage calculator. Today we're going to go through some live mortgage rates and then we're going to talk about VA loans. Give us just a second to go live on all the different platforms here. We do stream this live on Facebook, YouTube, LinkedIn, Instagram, and all the different podcast platforms as well. Go ahead and drop a comment there in the chat as you tune in. We definitely appreciate it. I see some comments already coming in there. We'll get started here in just a moment. Hope everybody had a great holiday weekend and is ready to get back to it this Tuesday. All right, comments coming in. Appreciate it. We'll get started here in just a moment. All right, so it looks like we're live on all the different platforms. We'll get started in a second here, but we'll take the chat off the screen, but go ahead and keep dropping comments there in the chat as you tune in, and you can also feel free to drop any questions you have in the chat as we go through here today. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender, and we do this show every weekday at 11 a.m. Eastern, where we pull up our actual live mortgage rates to see what it's looking like this morning, and then we do a deep dive into a different loan topic. Today's topic is something we haven't touched on in a while, which is VA loans. So our sales manager, Jose, with 28 years of experience as a loan officer and a realtor, has dealt with plenty of VA loans in his days and will take us in a deep dive into that topic here shortly. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go over the rates. So Nick, if you're ready, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right. Just check in. It looks like we did see some relaxing in the markets. Hopefully we see that reflected in the rates a little bit later. Let me go ahead and switch my screen and we'll pull up the pricing tool. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today, this February 20th, just after 11 a.m. Eastern. So all of our standard programs are live. As I mentioned, the markets are turning back in our favor, as last week was definitely not necessarily in our favor. So hopefully we see some downward momentum this week. This tool will show us the general APR. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with one of our loan officers. We have over 300 licensed loan officers, and they can provide you the full loan estimate that itemizes that all out. For all our demos today, so we can compare across the programs, we'll set a loan amount of $400,000. We'll set an LTV of 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. And then we'll compare that with FHA, which is usually the second option for most borrowers. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional options here. We also have VA, which is our topic for today, but that's only for our eligible vets and active service members. So we don't necessarily quote that live since not everybody is eligible. And USDA is only for eligible properties. If you are looking, just let us know. We can quote both of these, no problem. We'll start today with conforming conventional. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, let's see what this morning's rates are looking like. Looks like one retreated just a touch. Hopefully we see some more momentum. Remember last week we were at 6.9 something, so a lot of them are still in that range, but we have an option here at the top, 6.624 rate, 2.125 discount points of cost, puts the final APR at 6.89. I would expect this to continue downward a little more this week as well. Now, if for any reason our customer doesn't qualify for conventional, the next option we typically want to compare is an FHA option. So FHA allows more leniency on credit events as well as a much higher debt to income ratio. But to compare programs apples to apples here, we'll keep everything identical so we can compare the APR across the program. So everything else will be the same. All we've changed here is the loan type to FHA. So let's check out the options for FHA this morning. And again, not much movement yet, but I would expect to see some more this week. 5.875 rate, 2.25 discount points of cost, puts the final APR at 6.804. Now, this APR does include the upfront and yearly mortgage insurance that is required for FHA. So this option is great for our borrowers that may qualify for both. Definitely don't overlook FHA. It's actually a touch cheaper, you see here today, and often it is a touch cheaper. And for our customers that need to use it, this is awesome because it does include all the costs here and is almost identical to conventional. So great option for our borrowers that need to use these programs. Now, where we have to specialize is if our customer unfortunately doesn't qualify for either FHA or conventional. Many other banks or lenders will have to deny that customer, but that's where we love to say yes with our expanded guidelines, where we have over 5,000 additional options beyond the standard here. So when we select expanded guidelines, also known as non-QM, we'll keep everything else identical to compare. However, we have a new option pop up for income type. So if our customer doesn't qualify using full doc, which is what we use for FHA and conventional, that's 2 years of tax returns. So if they don't qualify using that, we'll want to use an alternative here. We have asset-related programs, business bank statement programs. The investor programs are just for investments. We'll pull that up in a second. Personal bank statement 12-month is the most popular. That's what we use for our demos in the mornings here. We also have RSU, stated income, BOE, 1099, P&L, no income, CDFI, all kinds of different options here. But the most popular is our 12-month personal bank statement, and that's for our self-employed borrowers. Many times it's our self-employed borrowers when they submit 2 years of tax returns may have write-offs and may not qualify at all, or just may need a little bit more income. Either way, we can solve the problem. No tax returns at all, just 12 bank statements, our last 12 bank statements here, to determine a debt-to-income ratio using no tax returns at all, just the cash in the bank. So in this example of 40% DTI would be just using the cash in the bank. Therefore, our self-employed borrowers qualify typically for much more income this way. So let's check out the non-QM options this morning. All right, best option at the top here, 7% rate, 2.225 discount points and costs for a final APR of 7.390. So as has been the case for the last little bit, we're within about a half a point of conventional, which is absolutely amazing for our customers that need to use these programs. It's almost the same price as conventional, so amazing there. And for the last couple months, we were even beating conventional some days. So just because we have to use alternative income, we still have some great options. And if we scroll down here, some of the other options here at higher rates and cost variations may allow different things like bankruptcies, foreclosures, other credit events, which would otherwise not qualify us. And some may allow different ways to calculate the income. So hundreds of variations. Please get with our team to find the best options here. And for our last demos for the live pricer, we want to do investment properties. So we'll set the same scenario up, 400,000 loan amount, 80% loan to value. And we'll ask the computer to compare the lowest rates we can offer for conforming conventional for investments. And then we'll compare that with our non-QM expanded guideline options. Remember, government programs, FHA, VA, USDA do not work for investments. So we don't quote those here. We'll just compare these two. We'll start with conforming conventional. Everything's going to stay the same. All we've edited here is the occupancy to investment. So let's check out the conventional options this morning. And as has been the case for the last little while, when the rates get a little bit volatile, we have this portfolio option pop up. So this is the same guidelines, Fannie Mae and Freddie Mac guidelines. However, it doesn't actually get sold to them. So we can offer this with no loan level price adjustments. So this option is technically the same guidelines, but not necessarily a true conventional loan. But amazing options here. Definitely don't overlook this option when you're quoting your clients. 6.875 rate for 3.25 discount points and cost puts the final APR at 7.264 for that option. And our best true conventional option here is a FNMA, stands for Fannie Mae, 7.125 rate for 3.5 discount points and cost puts the final APR at 7.549. So just a touch above the portfolio option there. So great option to check out. But I definitely recommend all of our investors, as I say every day, check out our non-QM options. So for the final demo, we'll set up everything the same here. And this time we'll select expanded guidelines, also known as non-QM. So the first thing that pops up, as it did before, we must select our income type. For an investment property, the most popular income type and the most popular loan we do here by far is our DSCR option. And that's because it doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rental income from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the expenses, aka the property cash flows, that's a ratio of 1 or higher. If the property doesn't quite cash flow and the ratio is under 1, we still have options. For the demo, we put 1.5 so that we can see all the programs pop up using that high value there. And finally, a prepayment penalty must be selected. 3 years is standard on these programs. We can select no prepay. That will cost more and limit the programs that pop up. There are also programs that allow 5 years, but that does limit what shows up. But it does save our customers some money if they want to hold the property. 3 years is standard. That's what we'll use for the demo. So we can see the most common options here. All right. Absolutely smoking. Best rate at the top here, 6.75 rate for DSCR loan. Amazing. 3.15 discount points and cost. Puts the final APR at 7.229. So this option beating the conventional, beating the portfolio. Absolutely amazing. We have DSCR options beating conventional. So I'd say 110% of investors presented this option will choose the DSCR option because of the ease and flexibility compared to conventional no income, no employment, and none of that stuff. And we can do 1, 2, 5, 10 loans at a time. Lots of flexibility. And if we scroll down, some of these programs are a little bit higher rates and costs, may allow things like bankruptcies and foreclosures, other credit issues, may allow things like calculating the income differently, short-term rental income, the episode we do often, a very common request. So tons of different options. Please get with our team to find the best ones. And let me turn off the live pricer here, and we'll get into today's example. So today we'll be talking about VA loans. So unfortunately, since not everybody qualifies and they are a little bit tricky, we don't get to do that live pricing, even though we love to work with our vets and service members. Obviously, these programs love to work with our vets and service members as well. These are definitely a benefit of serving your country here. So if you have a certificate of eligibility, which determines if you're able to get a VA loan, so that's the first step. That's why we don't necessarily do it live, since not everybody has that certificate. But if you do, definitely amazing program. So please take advantage if you're out there. We appreciate your service for all of our vets and active service members. And please check out these programs. And please, for all of our team members watching, please let your vets know that these programs exist. They're typically always going to be the best option for our borrowers that do have that certificate of eligibility. So go ahead, Jose, if you're ready. Let's check out some actual live examples here.
Well, good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator, your favorite non-QM lender with over 5,000 programs. Our VA loans are for our active service members and our veterans, right? Only for those, but it is 100% financing, right? It's the service that we give back to our military for all of the things that they do for us. VA loans are possible, 100% financing for purchases, 100% financing for refinances, cash outs, rate and terms, EARL refi, which is a no credit check, no income check, no appraisal type of VA loan, as long as you are current on your payment. That's the deal. And as long as you're refinancing from an existing VA loan to this EARL loan, no appraisal will be required. We even have renovation loans for VA, which is only for 1 and 2 unit properties only, by the way, with the renovation loans. And we even have one-time close construction loans, right? That's available for 1 unit properties only. So let me go ahead and share with you all the great options that I have this morning for our veterans. Our first option is a 1 unit purchase, 100% loan to value. And in these examples here, I'm assuming that our veteran or active military, in this case, that they are exempt. So if they have at least a 10% or greater service related disability, they are exempt from the VA funding fee. VA never has mortgage insurance, but they do have a funding fee, again, unless you are exempt because you have at least a 10% or greater service related disability. So here we have 7.125 is our lowest cost option, and 6% is our lowest rate option. Now, really cool here, VA loans for our house hackers out there do allow up to a 4 unit purchase. So here I have a 2 to 4 unit purchase using VA. Again, uh, I'll let you know, no loan level price adjustments here. Same cost on the rate for a 1 unit to 4 units. So we have 7.125 as our lowest cost option, 6% as our lowest rate option. Now for our renovation loan, this is similar to the FHA 203K or the Fannie Mae and Freddie Mac versions as well. This is a loan that allows you to close on a property that has condition related issues, or possibly you're buying it and you want to put a new kitchen, new bathrooms, whatever it may be that you want to do, that you want to include it with the purchase loan. The renovation loan allows you to do that. Now, one of the main, best, should I say, purposes of this loan is if you're buying a property that has condition related issues that won't let it close, something that would be, like the code compliance or something, addition done without permits, you got to take it down, redo it, whatever it may be, missing, or it's vandalized, missing components that normally would not let you close on that property. Well, the renovation loan will let you close on that property. So here we have our lowest cost option, 7.75%, and our lowest rate option, 6.5% for our renovation loan that goes up to 100% LTV. Now, another popular program is the one-time close. Now, this is for a 1 unit property only. This is not available for 2 to 4 units, just like the renovation loan is for 1 to 2 units only, not available for 3 or 4 units. So in this case, you can buy the land with this loan, you can build the house with this loan, and then once the construction is completed, the loan rolls over into the final end loan, which are all at these interest rates that you see here. So you have 7.75% as your lowest cost option, 7.125% as your lowest rate option. And now we have a VA cash out refi, 100% loan to value. Yes, we do have the 100% LTV cash out refis at the mortgage calculator. As you know, many lenders out there put overlays on the cash out refis, only letting them go up to 90%. We do have the 100% LTV cash out option at the mortgage calculator. 7.125 is our lowest cost option. 6.5% is our lowest rate option. And for our last example here, I am sharing with you the VA Earl. The Earl is the rate and term refi that I mentioned to you. It goes up to 100% LTV. This is only applicable if you're refinancing an existing VA into another VA, and it has a lot of benefits like no appraisal, no income, and no credit checks as long as you are current on the home loan. So 100% LTV possible there for your rate and term. And you'll see, obviously, the great rates here. 6.75% is our lowest cost option, and 6.125% is our lowest rate option for our VA Earl program. So great VA options here. We ran the whole spectrum from 1 unit purchase, 2 to 4 unit purchase, 1 to 2 unit renovation loan, 1 unit one-time close, 100% cash out refi, and 100% rate and term Earl. No income, no credit, and no appraisal option.
Wow, great options there. All right, I don't see any questions here. Let me scroll through. No, yeah, no questions. All right, well, great programs. I'm glad we did that. We haven't done that in a while. So
Let me ask you a question, Jose. So the renovation one, the VA is very strict on the appraisal. So what kind of specific issues can the renovation help solve that a lot of our vets might be used to when they lose deals because of the appraisal requirements? What are those weird problems that we can solve that sometimes pop up?
Deferred maintenance, for example, right? That's a big one for VA. Peeling paint, rotted wood. I've had them where the deck has to get redone because they feel it's too rickety when they're maybe not up to code.
I've had one where the kitchen drawer didn't stop; it pulled out, so they may put a condition for that to be fixed, right? To stop the drawer from pulling out in case a kid pulls it out. So very strict, right? They get real down to nitty gritty there.
Yeah, I mean, they're talking about livability, same as FHA, just more strict, right? A lot of the livability components on the home, right? Things you wouldn't even think of, but obviously this is a simple fix. But like locks, door locks that have, like the deadbolt on the inside, not a dual key lock, things like that VA is going to look at, and then also just compliance, code compliance with wiring. I mean, anything that you could imagine that's going to affect the livability of a home, VA is going to be concerned about and could ask for reconditioning to be able to close. And then obviously that would be a good time. For example, if the whole home needed a paint job, for example, that could be $3,000. And that has to be done either before closing, or the only way you're going to close on it, doing it after closing, is with a renovation loan.
That's what I was going to ask. So any of these problems that come up, normally the only option is seller fix it or we're done, right?
Correct.
But now we have an alternative, right? We can fix anything with the renovation loan, anything that affects the livability.
This is a really good way to get competitive too, because you got to understand a lot of times these sellers may be facing, they know what the issues are with the home and they know it may affect financing. So their choices may be a cash buyer at a discounted price, or the renovation loan buyer who's going to be paying market price and just going to be happy that they're going to be able to fix that home as part of the loan and end up with a nice, good condition home. So it's a win-win situation for the borrower and a win-win situation for the seller, who's going to sell it at market value and also going to be helping out a veteran.
All right. Well, good stuff. I think we can go ahead and wrap it up then. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different loan topic each time. So we'll be back tomorrow with a new topic. Thank you, everybody, for tuning in. We appreciate it. And we will see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.